Good morning. This is Bloomberg Daybreak Europe. I'm Jumana Bersachi, and these are the stories that set your agenda. The biggest of all the deals. European stock futures gain as President Trump hails an agreement with Brussels that sets tariffs on most EU imports at 15%. Talks on the trade truce. Chinese and U.S. officials meet in Stockholm today as they look to extend their current moratorium on steeper tariffs. And Israel says it's increasing aid distribution to Gaza, responding to growing international condemnation over increasing hunger in the war-ravaged territory. Earnings, so many earnings to get through this week, but kicking off the week and this show with Heineken, just to bring you the numbers, second quarter organic beer volume minus 0.4% versus estimates of plus 0.68%. So a miss when it comes to volumes. However, the company is still guiding to a full year adjusted operating profit of plus 4 to 8%. So the outlook is essentially unchanged. Interim dividend per share, 0.74, so 74 cents. And then that first half organic beer volume. So we spoke about the second quarter, but now let me just give you the result for the full first half of the year, minus 1.2% versus estimates of minus 1.05%. So a bit of a miss as well. And then the adjusted net revenue plus 2.1% versus estimates of 1.34%. So an adjusted net revenue beat, but beer volume miss so far. We'll be speaking to the CEO of Heineken in the next hour. That is at 7:15 UK time on the opening trade. But let's get back to markets now, because we are seeing a lot of risk-on sentiment this morning after news of that agreement between the U.S. and EU, inked in Scotland, of all places. But here you can see European stock futures pointed to open more than 1% higher. We are looking potentially at a record open for the DAX, the German index, so keep an eye there. FTSE 100 as well, building on very solid gains too, up 0.5%. It looks like it's going to open up there. S&P futures, Nasdaq also in the green too, up about 0.5%, 0.6% respectively, as both of those indices coming on from all-time record highs. And as we gear up for another big week in terms of earnings, both in Europe and in the U.S., plus the Fed meeting on Wednesday and jobs dates on Friday. It's going to be busy, everybody. Switch over cross-asset, taking a look at some of the key metrics. And of course, the first one that we're watching closely today is the euro. The currency continues to creep higher versus the USD, just shy of 118 now, 117.50, getting to close to the year-to-date highs. The USD, Bloomberg US dollar, the overall composite, hasn't done a lot despite news of this positive trade deal. So basically trading flat this morning. And then two-year yields as we head into the Fed meeting on Wednesday, not doing a whole lot, but the market is pricing in around 40 basis points worth of rate cuts for the rest of this year. And then Brent reacting positively to all of the trade news out of this weekend, up 0.7% or thereabouts. All right, let's also see how Asian markets are faring with Avril Hong in Singapore. Avril, what is on your radar today?
Yeah, Jumana, I think it's trade and chips. We have Asia stocks underperforming Europe futures. Maybe the assessment from some investors is that Europe have come away from this with a better arrangement than most countries. That being said, we are seeing Asia stocks with Europe exposure doing well today. Chinese equities expected to continue doing well as long as we get a US-China trade data out of Stockholm. Now, flip the board. If you're wondering why the Japanese benchmark is underperforming today, Advantis is a big drag. It's declining by the most since early April. It's also following on from a downgrade from UBS to sell against the backdrop of overheated share prices. But the other stock that we've really been focused on today has been Samsung. Before the trading day began, we got word via a statement that it's signed a major manufacturing deal with a global player. Sources later told Bloomberg this was none other than Tesla. That's something that Musk confirmed. The idea here is that Samsung builds the next generation of chips for Tesla at an upcoming plant in Texas. This is something that's seen as beneficial for its underperforming foundries business, and we're seeing the stock of Samsung today jumping by the most since at least early April. Jumana.
Yeah, well, chips and trade on your mind. Avril, thank you so much. That was Avril Hong in Singapore. Well, speaking of trade, the U.S. and European Union have struck a trade deal imposing a 15% tariff on most EU exports, including cars. As part of the pact, the bloc will ramp up purchases of American energy and boost investment in the U.S. while sidestepping President Trump's threat of steeper levies.
So I just want to congratulate you. I think it's great that we made a deal today instead of playing games and maybe not making a deal at all. I think it's, I'm going to let you say it, but I think it's the biggest deal ever made.
We have a deal. We have a trade deal between the two largest economies in the world. And it's a big deal. It's a huge deal. It will bring stability. It will bring predictability. That's very important for our businesses on both sides of the Atlantic. It's 15% tariffs across the board, all inclusive.
Let's bring in our UK correspondent, Lizzie Burden, who's in Turnberry in Scotland, where President Trump has been spending the weekends. Well, Lizzie, we know it's a big deal. It's a huge deal. Per Trump, it's the biggest deal that's ever been made. What is in the deal, and how did they get it across the line?
Well, Jemana, Ursula von der Leyen came to Trump's Turnberry golf course and she got her hole-in-one. The tariff war averted, this 15% US tariff on most EU goods. But, you know, this is much to the chagrin of many European industry lobby groups because it is still aiming to rebalance the EU's trade surplus with the US. So it's much higher than the other way around. Now, we await the details, but what we know is that 15% is all-inclusive. So Trump can't be slapping extra levies on individual sectors like chips, like cars, like drugs. And we know that Bloomberg Economics had estimated that the average effective US tariff rate on the EU would have been 18% by Friday, the August 1st deadline, were it not for this deal. Now it's going to be 16%. How did VDL get this deal over the line? Well, of course, there had to be a sweetener for Donald Trump to close it. And in this case, it was an agreement that the EU would spend $750 billion on American energy. It would invest $600 billion on top of existing investment commitments, and that the EU will spend vast amounts on American military equipment. So this is how they got it over the line. And as you say, markets, European futures, with a spring in their steps now that they have.
Yeah. So the late Her Majesty the Queen made one of these immortal statements. So when she said, recollections may vary. And I wonder whether that can also be applied to some of the terms of the deal that was agreed to between the US and EU, because there's still a lack of clarity about what's going on in the pharmaceutical space, Lizzie.
You mentioned the Queen. You remind me, Jemana, but that the spending on police security, the amount of police security here in Turnberry for Donald Trump's visit is higher than any point since the Queen's death back in 2022. But as you say, recollections may differ, and that applies in this case because Trump had said that the EU will be charging no tariffs on US goods. Von der Leyen says that that's only going to be the case for certain goods. For example, certain agricultural products, certain chemicals, aircraft and component parts, natural resources, critical raw materials. And if that's going to be the case, she says the US also needs to charge zero tariffs on certain goods, and they can work to extend that list. There's also, Jemana, a big question mark over how the EU is going to fulfill its commitment to spend $750 billion on American energy. And don't forget, as Treasury Secretary Scott Bessent puts it, there's this collective action problem at the EU. The EU member states still need to agree on all of this to finally get it over the line. There could still be pushback, but at this point, most of them just want a bit of certainty.
Yeah, a deal is a deal, though. Lizzie Burden, thank you so much. Now, speaking of the next big one, negotiators from the U.S. and China are due to meet in Sweden, where it's expected the deadline for higher U.S. tariffs on China will be extended for another 90 days. Bloomberg's Oliver Crook is in Stockholm. So, Oliver, just building on from what I was just discussing with Lizzie, there's now sort of a sense of optimism in the air. I think the expectation is that we're likely to get another extension on the U.S.-China front, which implies there's no final deal yet. So what are still the sticking points between U.S. and China right now?
Yeah, well, Jemana, I think there is a sort of open question as to conceptually what a final deal with the United States is on trade. But certainly the Chinese are further away from one than the Europeans from what they clinched over the last 24 hours. And the Chinese basically are trying to get another further extension on the runway for that trade deal that would expire, that truce that would expire on August the 12th. And just to remind everybody where we are, because it's hard to keep track of all of these numbers, the U.S. had imposed 125% tariffs on China. That basically foreclosed any ability to have any trading between the two biggest economies in the world, and that was sort of talked down to this truce. So now we're stuck at these 30% tariffs, 10 of which are sort of universal retaliatory tariffs, and 20% of which are from the sort of fentanyl tariffs that the Trump administration has put forward. What we will get today is the beginning of the third talks between the Vice Premier of China and the U.S. Treasury Secretary Scott Bessent, who will be here over the next couple of hours in Stockholm to have those negotiations. The desired outcome here is probably another 90-day extension truce to that truce. We have some reporting from the Chinese media that is already basically almost fully secured. The question will be then what will come next? Where will they be able to make progress on the other issues that they would like to discuss and they would like to see some changes? There is, of course, the main sort of elephant in the room here, which is the rare earth minerals and those advanced AI chips that the U.S. has capitulated on, agreed to sell to China in exchange for those rare earth metals. What they will also likely be discussing is the continued purchasing of crude oil and fossil fuels from Russia, from Iran, which are sanctioned by the G7 and the United States. And of course, there are some other issues like TikTok, right? There is the fact that the U.S. government, there is apparently a U.S. buyer for TikTok. That still needs a Chinese sign-off. So these are some of the conversations that will be happening here in Stockholm over the next couple of hours.
Yeah. I mean, the thing about President Trump is he also likes to make a big show of having achieved these trade deals or getting to these trade agreements with various counterparts. And you've got to wonder whether in this case, perhaps he's holding off to make that big announcement side by side with President Xi later this year. What do we know about the prospects of the two leaders meeting at some point?
Yeah, so he definitely has an instinct for the sort of showmanship and the sort of TV production side of things. And I think that if you were to get a sort of momentous large deal between the Chinese and the United States, it is the sort of thing that Donald Trump probably himself would like to bring into being. I mean, this is basically what we saw with the EU, right? We had Ursula von der Leyen flying up to Scotland in order to have the person-in-person meeting so that Trump could announce it alongside her, in person. So, I mean, the Chinese, we understand that there was a call between Xi Jinping and Trump. We understand that there has been an invitation extended to the President of the United States and the First Lady to come to China at some point. We are probably still some distance away from that. We should say that the fact that these discussions are happening between the Chinese and the United States in sort of neutral territory, was in Switzerland, in the UK, and now in Stockholm, really wants to sort of demonstrate the idea that nobody wants to be seen to be being pulled in either one of the directions. So I think we're probably still some distance away from that. That being said, this is the kind of announcement, Jemana, that as you expect, you think that the President of the United States would like to make right next to the Premier of China to really have the sort of full impact of what would be really a momentous trade deal and really one of the most sort of important pledges of the Trump administration in that campaign, saying that basically he's going to solve the trade problem with China.
Yeah, big one. Well, the takeaway from all of this is yet another potential trade deadline being pushed back as well. Oliver Crook, thank you. Oliver Crook in Stockholm today. Okay, let's take a closer look at how markets are reacting to this trade optimism. Bloomberg's Valerie Teitel is in the London studio. Val, what should we be watching out for as we head into the European Open? I mean, obviously, things are pointed to open up in the green. Any particular sectors you're watching out for?
Giovanna, I'll be watching out for the pharmaceutical sector and how they perhaps react positively to the fact they will get this 15% carve out in this EU trade deal. But when it comes to the markets, we're having a very interesting price action happen this morning. Equities are very solidly in the green, but we're not seeing a big bounce when it comes to FX with euro dollar trading around flat. That does seem odd, but you have to take into account what happened last week. Euro saw a very decent outperformance in G10, and Euro Stoxx 50 futures were flat on the week. So maybe a bit of trade-off there, and that price action is reversing. Fixed income is holding steady as well. U.S. 10-year yields are just a basis point higher. But, Giovanna, there is a lot of risk events on the board to shake up this markets. Note that on Friday, the VIX closed below a 15 handle, but there is a lot of risk events that could potentially shake up this low volatility. First, we have to deal with the big earnings week, not just in the U.S., but also in Europe. The Magnificent Seven, 4 of them due to report: Microsoft, Meta, Apple, and Amazon. We have to also take into account we have a lot of central banks this week. Giovanna, the Fed is the big one, but we also hear from the Bank of Canada and the Bank of Japan. The Fed is meeting with the understanding that they will be on hold. A lot of the market attention will be on how many dissents at this decision. We know that Governor Chris Waller set up his dissent a few weeks ago, but the outlook for the U.S. economy has improved in the last few weeks. Most economists have been revising down inflation and revising up growth. So very interesting to see what the Fed guidance is with that backdrop. Giovanna.
Yeah, it's almost the reverse stagflation, right? So higher growth and lower inflation. Bloomberg's Valerie Teitel, thank you so much. Now, coming up, Israel says it is resuming limited aid deliveries to Gaza after growing international outcry over spreading starvation. We'll have the latest from the region next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Well, Israel says it has resumed limited deliveries of aid to Gaza after growing international outcry over the number of people facing starvation. Now, the UN World Food Programme has warned that Gaza's entire population of 2.1 million people faces food insecurity, but Israel has denied deliberately starving them. And we're going to follow up on that in just a moment because this is a major story, and there has been a huge development over the course of the weekend with Israel deciding to loosen in and allow for the easier passage of some of the humanitarian aid that's getting in to the enclave, in addition to reports of some of the airdrops coming through from the likes of the UAE and Jordan coming through over the course of the weekend. And these are images, obviously, of the many Gazans who have been pleading for food and facing severe levels of famine and starvation over the last couple of months under the Israel policy. And of course, it has come under a lot of scrutiny vis-a-vis how the aid has been directed, even though there is a Gaza Humanitarian Aid Foundation that has been set up. So more on that story in just a little while, but bringing you some tech news now. The head of Alibaba's cloud and AI unit says 90% of the technology and services that have been sprung up since OpenAI's ChatGPT could be gone in under a decade. Wang Jian spoke exclusively to Bloomberg's Annabelle Jewelers at the World AI Conference in Shanghai.
I would say as just like a single organization or single person, you really cannot go that fast for a long time, okay? You know, you collapse, okay? Like, you know, I can work in like for 3 days and without any sleep, but not anymore, okay? Not anymore, and you really cannot like work 30 days and don't have any sleep, okay? There's no way you can do that. Okay?
Work ethic in China is famous.
But I would say collectively, we can have a very fast iteration, okay? Like, so that's why I really like a stubborn mindset. So basically, you know, like DeepSeek could do something very fast, okay? And then we also have Queen, okay? And then we have Kimi, okay? So collectively, and we can push that fast. I think that's okay. Actually, that's what I think is important. Otherwise, why we need that population, okay? So that's why, you know, when people get together, And it's not just for, competition, whether you win or not. It's basically, you can have the very fast iteration of the technology because of this competition, or because, and you work fast this time, and you slow a bit, and then other guy move very fast. And eventually we slow down a bit. And if you're good enough, you can catch up again. And I don't think it's brutal, but I think it's very healthy because, and when we work with the people that is very competitive, that would make you much more competitive, because that was the way how I think the new technology would be invented. Yeah.
Yeah, you're talking, I guess, about more of a marathon, not just a sprint race.
Yes.
Is there space, though, for new contestants to enter that race today?
I would say, at least for the AI, it's a marathon, because I think nobody could really see, if it's a long journey, it's definitely in the very beginning.
Well, that was Alibaba cloud founder Wang Jian speaking exclusively to Bloomberg's Annabelle Jewelers. Well, coming up, we're going to revisit that story. Israel says it is resuming limited aid deliveries to Gaza after growing international outcry over spreading starvation. We'll have the latest. This is Bloomberg. Well, our top story from the Middle East region today, Israel is resuming and easing Gaza aid curbs. So let's talk more about that with Bloomberg's Paul Wallace. Talk us through the developments over the weekend and what is being done on the humanitarian side.
So Israel has announced an easing of some of its restrictions on aid flows into Gaza. So we've seen some airdrops, I think, from Israel itself and the likes of the UAE and Jordan, and there are meant to be more trucks going in as well. Just with the airdrops, they are probably never going to make that much difference. They never did when they were tried earlier in the war. It's the land borders that are absolutely crucial. So Israel says it has eased some restrictions to try and ease what is clearly, a humanitarian deep crisis in Gaza.
Yeah, and as we talk about the pressure from the international community on the worsening humanitarian situation, today the UK Prime Minister Keir Starmer is going to be meeting with President Trump in Scotland. Let's talk about the trade and beyond that, also Gaza as well. He himself under pressure after President Macron last week recognized Palestinian statehood. What can we expect out of the discussions there, and whether it can actually have an impact on the ceasefire discussions as well?
You're right. Keir Starmer is under pressure, and I think the bigger picture here is the growing outrage around the world and among world leaders about the humanitarian situation in Gaza. Of course, France's President Emmanuel Macron has said that France will recognize a Palestinian state in September. He would like the UK and other states as well to join him in that effort. It's unclear at the moment if this is going to make any difference on the ground, really, for Palestinians, either with regards to statehood or in the more immediate term, a ceasefire between Hamas and Israel. They seem pretty far away from that. There was a lot of optimism a week ago that we were close to a ceasefire, the 60-day truce that's been talked about for a long time, but obviously that didn't happen. And U.S. officials are now sounding quite frustrated. U.S. Secretary of State Marco Rubio has said that the U.S. and Israel are going to have to try a different strategy, because these talks with Hamas, for one reason or another, simply aren't working. They're not getting the two sides to agree to a ceasefire.
Neither is the restriction of humanitarian aid. To that effect. Paul, thank you so much. Bloomberg's Paul Wallace with the latest from Gaza. Now, coming up, we'll get a preview of the meeting that's going to take place between the Prime Minister Keir Starmer and President Trump, as they also look to remove obstacles to the U.S.-UK trade deal. So that's coming up next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. I'm Jumana Bersachi in Dubai, and these are the stories that set your agenda. The biggest of all the deals, the European stock futures gain as President Trump hails an agreement with Brussels that sets tariff on most EU imports at 15%. Talks on the trade truce. Chinese and U.S. officials meet in Stockholm as they look to extend their current moratorium on steeper tariffs. And Israel says it's increasing aid distribution to Gaza, responding to growing international condemnation over increasing hunger in the war-ravaged territory. And on the back of these trade deals, we are getting a major risk-on move, at least for European markets, as we head into the open. European stock futures are pointed to open up around 1% higher today, 1.1% now as we speak, getting closer and closer to the market open in about 90 minutes' time. Keep a close eye on the DAX. We may also be looking to break through all-time record highs, as we also talk about the S&P and NASDAQ building on from all-time record highs last week towards the close. Both of the Wall Street indices pointed to open up once again in the green. Big week for earnings. We've got Amazon, Microsoft, Meta reporting this week, plus the Fed meeting on Wednesday, plus jobs reports on Friday, and then obviously all of the other earnings to watch out for in Europe as well. So another mega week of trade, of earnings, and of central banks coming up. Switching over, let's take a look at some of the other assets as well that we're monitoring. Euro continues to, creep higher. Today not doing a whole lot, trading sideways. 117.40 is where we're at, even though you could say that the worst case scenario of that 30% tariff rate has been avoided now, but getting very close to the highs of the year. The U.S. dollar inching a little bit higher, but basically flattish. The Bloomberg USD. Two-year yields not doing a whole lot today, trading flat, though we are pricing in around 40 basis points of rate cuts by the end of this year. And then Brent sitting at $69, about 0.6% firmer, moving higher on some of that trade optimism and the fact that these deals have been agreed to over the course of the weekend. Bloomberg's Valerie Teitel is here as well. Val, I was sort of giving an overarching narrative about how markets are faring. But big picture, though, this appears to be very good news for European assets. The question is it going to last, or is this going to be a short-lived rally?
Yeah, another question is how much of this has already really been priced in? I found this chart behind me really interesting this morning to kind of put it in perspective how much these tariff-exposed European stocks have already recovered, at least last week. Here, this chart, there's three lines here. This white one is the Euro Stoxx 600, the broad European benchmark. The one in blue is the domestic exposure basket. Those are those stocks that might have been boosted by this infrastructure spending coming out of Germany. The one in yellow is a UBS basket of European tariff losers. See how much we've already closed the gap, Jumana. This is telling me that a lot of this EU-US deal might have already been priced in to European equities, but it'll be very interesting to watch the open, especially how car makers, how pharmaceuticals, how even those luxury retailers in France react to the latest on the EU-US deal. Now, we do have all the trade being a big driver of this morning's news. We also have to keep in mind it is a big week for European earnings, especially in the UK, Jumana. Over 50% of the market cap of the FTSE 100 reports in the next 5 sessions. A lot of that is down to three things. We have the banks, we have pharma, and we have big oil coming out of the UK when it comes to those earnings reports this week. Jumana.
Nice one, Val. Thank you so much. Well, speaking of the UK, Prime Minister Keir Starmer will meet with President Trump in Scotland in the coming hours. Starmer is looking to remove obstacles to their trade deal and press for a ceasefire in Gaza. Let's bring in Bloomberg's Lizzie Burden, who's there for us, standing in her wellies, maybe. Lizzie, tell us more about what's on slate today and what is exactly on President Trump's agenda in Scotland. It wasn't supposed to be an official visit, but we're getting loads of headlines and deals out of this visit.
We are indeed. A private visit, very rarely private when it comes to this president. We're at Turnberry, which is, of course, one of Donald Trump's 2 luxury golf resorts here in the UK, in Scotland, his motherland. And he's already hosted Ursula von der Leyen, the European Commission president, and made that biggest deal of all. Today, he's going to meet the UK Prime Minister Keir Starmer. Now, golf isn't just ostensibly what Trump is here to do. He does love a game of golf. he also wants Turnberry to host the Open again. And we hear that British officials have been quietly scurrying to help make that happen. But top of mind for Keir Starmer really is going to be trade. Of course, he was front of the queue for a deal with Washington, and now they want to iron out the details of that, particularly on steel. But Donald Trump says there's not a lot of wiggle room there. Starmer also has downplayed the prospect of a breakthrough. The other issue that may come up, as you have flagged, Jemana, is Gaza. Starmer under a lot of pressure, both domestically and internationally, to press Trump to revive the Gaza peace talks. Of course, as you say, you had US officials walking away from the table on Thursday. But Keir Starmer is going to know the limits of his own influence on the Israeli Prime Minister Benjamin Netanyahu, and he is not going to want Trump to doubt that the UK has Israel's back here.
Let's go back to the big story of the weekend and the fact that the EU and US have finally agreed to that trade deal. You called it a hole-in-one earlier. So maybe to pick up on that golf analogy, how did von der Leyen get her hole-in-one? What had to happen?
Well, look, just like when the Japanese negotiators met with the US officials, they had to offer a sweetener to get that deal over the line. And for the EU, that comes in the form of $750 billion of investment in American energy, an extra $600 billion on top of other investment pledges, and spending vast amounts when it comes to US military equipment. But what VDL seems to have got here is an agreement that the US will charge 15% tariffs on most EU goods. And that is a relief. It's higher than, I should add, the EU is going to charge on most EU goods, but she has acknowledged that they need to redress the imbalance in US-EU trade. What Trump is saying is that he can't add extra tariffs on, for example, chips or drugs or cars on top of this. And it's a relief because Bloomberg Economics had calculated that the average effective US tariff rate on EU goods would have been 18% on Friday, August the 1st, the tariff deadline, were it not for this deal. Now it's going to be 16%. And this is what is powering European stock futures higher this morning.
Yeah, though, as Val was saying, how much of that was already in the price? So let's see what happens in the coming days. Lizzie Burden and Turnberry, thank you so much for the reporting. Well, let's stick to the theme of trade. Today's Big Take looks at the economic fallout of the U.S. tariffs. Financial markets may have made their peace with Donald Trump's trade policy, but the damage to the global economy is becoming clearer. Bloomberg's Balazs Pence joins us with more. So let me just start off with perhaps the number one overarching question. Putting markets aside for a moment, what actual impact are these tariffs having on the global economy right now?
Yeah, you're right, Jemana. As we have seen today, some of these agreements have been cause for jubilation in markets, but the underlying truth remains that the ground is shifting under the global economy, with U.S. tariffs set to go to the highest in 100 years, and that will have an impact on economic growth. Our colleagues at Bloomberg Economics estimate that the cost to the global economy will be about $2 trillion through the end of 2027. Obviously, most of that is yet to play out, and it comes down to companies freezing capital spending, rerouting global supply chains, trimming their own margins. But Bloomberg Economics has cut its forecast for the global economy for this year and next, and they are seeing slower growth across the board for major economies, from the US to the EU, from China to Japan.
Yeah. When President Trump campaigned and he spoke about tariffs, he talked about this big picture of rewiring global trade and bringing manufacturing jobs back to the United States. So maybe let's just take a step back and see whether he's been successful at that. Are there any signs that U.S. manufacturing is coming back on the back of all of these potential trade deals?
Well, look, there have been some announcements, right? Just today we heard that Samsung is setting up a major factory in Texas to make chips for Tesla. But the truth is, these takes these sorts of investments take years to come to fruition. They take a long time to get up and running. And in the meantime, what we see even more evidence of is companies holding back on those decisions. It's very hard to commit a large amount of investment when the tariffs keep changing, the deadlines keep changing, exceptions keep changing, there are countermeasures coming in all the time. So companies need to weigh all that. And the early indicators that we have seen so far in the U.S., like construction spending and equipment purchases, have actually shown weakness. And the Atlanta Fed's model is showing U.S. investments actually stalling out right now.
Yeah, interesting. There really is a stark divergence between what markets are saying and perhaps what the real economy is saying as well. Balazs Pence, thank you so much. And coming up, Heineken net revenue for the first half year meets analyst estimates, but beer volumes are down. Details coming next. This is Bloomberg.
Earnings season is here.
The focus is on the European earnings space.
A busy week of corporate earnings.
We're going to be deeply into a lot of these earnings stories. Bloomberg is first to break the numbers.
Santander, Caixa, Soc Gen,
Deutsche Bank, HSBC, BBVA.
A slew of bank earnings already out.
With the smartest insights.
There's an earnings revolution going on.
Markets are going to be driven more by earnings.
It looks like the worst is behind us.
Continuing coverage on Bloomberg. Context changes everything.
Welcome back to Bloomberg Daybreak Europe. Let's return to those Heineken earnings that we broke at the top of the hour. The Dutch brewer saw a decline in beer volumes as retailer disputes across Europe dragged on sales and limited its ability to take advantage of the summer heat wave. Bloomberg's Kit Rees joins me now. So we talk about perhaps the disappointing beer volume numbers. What else stood out most in these results?
Yes, so it's pretty appropriate that we're talking about beer given the events at last night's Euros, but perhaps not much to cheer about for Heineken investors this morning. So people will be really focusing on the decline in beer volumes, and flicking through the results, it was clear that Europe was the big area of weakness given these extended retailer negotiations that the company's been having. But Heineken said that these negotiations have been concluded, so perhaps that's a reason for optimism. Also, the company did maintain its guidance for the year, which could be seen as a positive. So all in all, perhaps a little bit of a mixed bag, but investors will really be keen not to look more at those beer volume declines.
Yeah, is that what investors will be mainly looking out for at the conference call later today? A little bit more detail about what's been going on in those volumes, or are there other things that will come up on the call as well?
Definitely. I mean, investors will be looking out for hot topics such as the impact of inflation. Peers such as Carlsberg earlier in the year flagged the impact of higher input costs and things like cardboard and aluminium on making the actual cans. So perhaps investors will also be looking to see if Heineken has seen any similar trends there. Also, tariffs is the big topic recently. We've got the tariff deadline coming up on August the 1st, which everyone will be watching. So any commentary from company about the potential impact of tariffs, how they're managing supply chains, will also be very carefully watched. Plus, any other commentary on consumer trends, such as with the heat wave, have people been going out? Have they been spending more? All of these topics will be very closely watched by investors.
Yeah, and the other big topic that people always bring up in the context of beer is whether there's been a big shift into the non-alcoholic options as well. That always is a big theme, a growing one. Bloomberg's Kit Rees, thank you so much. And just on a programming note, we will be speaking to the CEO of Heineken in the next hour. That is at 7:15 UK time on the opening trade, so in about half an hour's time. Well, it is a big week for European corporates, with results coming through across major sectors, including banks, pharma, and autos. Earnings are expected to show how companies are confronting uncertainty and tariff-fueled cost increases. Joining me now is Tim Craighead, Global Chief Content Officer and Research Director at Bloomberg Intelligence. Tim, good to have you with us. So U.S. earnings, we know there's been an almost 80% positive surprise rate so far. How is it looking for Europe and what we've got out of the earnings season?
Really good question, Jumana. Europe doesn't play the game quite like the U.S. does from the standpoint of setting expectations and then beating. But so far, we have had earnings beats exceed misses. That's the good news. The bad news is that even though earnings are tracking better than what was expected, we're still down more than 3.5% in terms of year-on-year earnings. Just that expectations had drifted down closer to a 5% decline. There's a lot of challenges facing European corporates right now, whether it be concern about tariffs and what the implications there are, FX, which has been a hit, or economic growth, which has been soft. So all of this is playing through in terms of that earnings decline better than expected as it might have been.
Yeah, it's ironic given that the DAX is close to the all-time high, FTSE 100 as well. But then you look at the second quarter earnings growth and it's negative. How much of that is to do with the uncertainty around tariff and in some cases the actual tariff impact, like in the instance of autos?
Yeah, it's interesting so far. It's all been about expectations as opposed to necessarily actual impact. Although I would say our European equity strategists this morning have out a mid-earnings season assessment, and they've got some analysis there looking at what companies have announced so far on tariffs. Roughly half of the companies that have talked about tariffs are seeing a negative impact, either through various elements of trade disruption or customer indecision. There's another group of, call it 40-odd%, who are seeing elements of mitigation or the ability to pass along price increases, but it's more negative than it is positive. That's for sure.
Yeah, but the big news over the weekend was that we did get the EU-US trade deal. Again, some questions, a bit of haziness about whether the pharmaceutical sector or the industry is actually going to be included in that lower baseline rate. What do you think the knock-on effect is going to be for some of the earnings? So not necessarily the earnings this week is too soon to tell, but later on in the year, how could this provide a potential tailwind to European equities?
Yeah, I mean, it's true for pharma and it's true broadly, more broadly. 15% is better than a 30% tariff rate. It's, for sure. But the thing that we have yet to see, and we're not going to see until third quarter or fourth quarter earnings and on into next year, is what the real impact is from tariffs. And there are still, outside issues like what President Trump had said about pharma. It's 15%, but there is still that ongoing investigation that is taking place on pharma specifically that could potentially raise it higher. So I think we're going to continue to see this on again, off again situation on tariffs, tariff threat, tariff resolution from a deal-making perspective, as he likes to do. The real question is, what is that impact on reglobalization, rewiring of supply chains, rewiring of customer opportunities from the standpoint of European companies that are so dependent on trade as an element of their business?
Yeah. Tim Craighead from Bloomberg Intelligence, thank you so much for the preview as we head into a really big earnings week in Europe. Thank you. Now to some of the other stories making news today. Samsung will produce AI semiconductors for Tesla in a new $16.5 billion pact that marks a win for its underperforming foundry division. South Korea's largest company says the chip-making agreements will run through to the end of 2033. In a post on X, Tesla CEO Elon Musk said the plan is for an upcoming plant in Texas to produce Tesla's next-generation AI6 chip. The contract win comes as Samsung moves to regain ground in chip manufacturing, with its share of the global market slipping below 8% in the latest quarter. And in positive sports news, England has successfully defended its Women's European Championship title. The Lionesses thrived in high tension yet again to take down world champion Spain in a penalty shootout in the final. Chloe Kelly converted the decisive spot kick to seal victory to give England a 3-1 win on penalties after a 1-1 draw after extra time. So it's coming home. I guess it came home. At least the women brought it home, like we always do. All right, plenty more coming up. This is Bloomberg.
We're looking at deals with 3 or 4 other countries. But for the most part, I can't get them to understand that it's the letter. We just sent that letter, and that letter is, very universal for most. I mean, you wouldn't be able to do this. You wouldn't have the time or the patience to be able to do a deal like this. Most of the others are going to be a certain tariff, and we're going to keep it as low as we can.
Well, that was President Trump speaking from his golf course in Turnberry, Scotland on Sunday, where, of course, the big news was that U.S. and the EU agreed to that trade deal. And that is a real positive momentum, giving a positive momentum to European stocks this morning. But here, just taking a look at the numbers. So how big is the actual U.S. trade deficit with the EU? $451 billion. So this is, per President Trump, and we know he likes the superlatives, the biggest trade deal ever agreed to. Huge sums that we're talking about there. $451 billion worth of goods will now be mostly subjected to a baseline tariff rate of 15%. So that's that. Here we were talking about the big earnings week coming up in Europe. Lots of banks reporting this week, including the likes of Barclays, HSBC to watch out for. But take a look at how well the European banking sector has done since 2020. The sector is up threefold since 5 years ago versus the overall performance of the Stock 600. It's really overshadowed, especially in the last couple of years. And you've got to wonder whether those tailwinds are going to continue or whether these banks are going to start bumping into some resistance. It's certainly been a very strong start to the earnings season on back of volatility. So FIC trading, FX trading has all done well. What does investment banking look like? What is the guidance for net interest income? Those are big questions. And then finally, this one is interesting. After that very, very memorable visit of President Trump to the Fed headquarters last week, both him and the Fed Chair Jerome Powell were standing in their hard hats talking about renovations. But bottom line is, after that meeting, the markets have pared down their expectations of the potential for Trump being dismissed from his role before his term ends in May 2026. A couple of weeks ago, it was looking like 37% odds that Powell will not make it to May 2026. Now it's looking like 15%, i.e., mostly looks like he's going to be safe until the end of his term. So maybe we can put that thought behind us for now. Okay, and Bloomberg terminal users can access all of these charts and others used throughout the show at GTV Go on the Bloomberg terminal. So many different resources that you can look at there, including some of these fun charts like Powell dismissal odds, which have come down a lot in the last couple of days. All right, that was it for our show. The opening trade is coming up next. This is Bloomberg.